morning, afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. 646 video, baby. Yeah. Traders, we have 645 other technical analysis training videos like this one for you to learn from. So if you like what you will see in the next 20 minutes in this video, please go watch some of the others. They will help you become better analysts. Traders, before I get into it, I must remind you that futures trading is risky and can cause substantial financial loss. And no joke, futures trading is not suitable for every trading account. And if you don't know what you're doing in this game, you will be hung out to dry. So make sure that you understand futures if you're going to play it, and always use your stops. But for you cowboys out there that like the futures and know what stops are, baby, this video is being filmed on 10/26/10 for trading on Wednesday, the 27th. Traders, what do I have on the board for you? Well, right off the bat, Euro has a red Omni downside, and the S&P has a green Omni upside. And that, my friends, is not a usual event, and we'll talk about that. Traders, what else is on the board? The NASDAQ is absolutely leading the bullish parade. Undoubtedly, the last 8 weeks, 6 weeks, have been NASDAQ powering this move. And I think the NASDAQ continues to bull further and lead the other indices higher. The ES is following right behind. I mean, it just stays in lockstep with that NASDAQ, which is dragging it higher. Traders, what else? Bearish Euro, bullish S&P with some question marks. What does that mean? Well, traders, I have some charts that I'm going to show you which should basically explain what that means. At my site, the Omni Trading Academy, and when I held lessons at my site, many times I have told people that what we will expect soon with the dollar going down the way it is that at some point the S&P will start to go up with the US dollar, and that will make S&P go this way and Euro go that way, or S&P go up and dollar go up with it. Traders, I know that that is not what is happening or what has happened recently, and that is not what you would think logically, but I am here to explain to you that that is what happens when you push the dollar down far enough. It makes our stocks become cheap. In fact, the value of the dollar going down the way it is gives a new lease on life to valuations of our stocks, especially the Europeans and foreign investors. The valuations of our stocks look relatively cheap right now, especially with the dollar going down. At some point, what happens is the dollar gets so cheap that too cheap is too cheap, and buyers come back in. But while the dollar was going down, it gives the S&P and the stock markets a lot of wind under its sails, a lot of boost. And even when the dollar stops going down and bottoms and starts to go up, generally you'll get the S&P and the dollar to go up at the same time. That is what happens stage 2 after pushing down the US dollar. And I have charts that will absolutely depict that for you traders. It will show you that once the dollar gets pushed down far enough, the S&P starts to go up, and then when the dollar stops going down, the dollar and the S&P start doing this together. The chart segment that we're going to do in a moment or two will be absolutely focused upon that. So remember, what we have on the board, NASDAQ very bullish, leading the parade. The ES is following right behind. You have a bearish Euro, and at the same time, a bullish S&P. That is something. I love that song, baby. You know this time of day. This part of the video is when I get to answer a question from one of my Omniacs. It's the comment question of the day. And traders, what happens during this comment question is I get an envelope handed to me, which I do not know what is in it or who it's from. And then my able-bodied assistant hands me a device to open the envelope with, but I never know what that's going to be, so I generally get out of the way in case it's scary. What do you got for me to open the envelope with this time? Oh, hey, it's only a phone cord. I thought maybe it was a snake. It's a phone cord. It can do lots of things, too. If I put a hat on right now, it would look pretty silly, but let's just stay with the phone cords here. Traders, I got to try to get the envelope open to find out what the question is with a phone cord, and you know, I think I'm going to be able to do this. And I'm just going to get this little guy in here. Come on, pal, get in there. Whoa, 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 come on. Yes, we're in. Little snake head here. We're trying to get in the envelope. Come on, get in there. All right. So, we're halfway through, and soon enough, I'm going to find out what the question is. Wow, this is a tough one, Mike. I can't get in. I can't get in. Oh, I think I got something. Woo! Yeah, baby, we're on our way now. And it is open. Snake for you. Woo! He dropped it. You didn't catch that one, did you? All right. We have our comment question of the day, the Ask Oscar segment of this video, and it comes from Trade Charmer. Trade Charmer, first off, thank you for writing in. Thank you very much for participating in the comment question of the day. Trade Charmer, what do you have to say, buddy? Trade Charmer says, Oscar, with all of these bearish indicators in the stock market and the ES markets, the S&P market, why continue to call for the upside? Thank you in advance, Trade Charmer. Well, Trade Charmer, first of all, great question. Thank you so much for writing in and asking. The question is, with all the bearish indicators in the S&P and in separate stocks, why am I calling for more upside? Traders, because the monthly and the weekly charts are blowing out. They are through all of our, or most of our proprietary averages. They are in bullish trend channels. The dollar has been pushed down to the point where stocks are cheap. And in fact, in the chart segment I'm about to show you, you know what? This crosses well. Trade Charmer, I'm going to do a chart segment right now, and I think I can answer your question with the last chart that I am going to show you. So pay attention to this chart segment, and with no further ado, let's go look at some charts, and let's go answer charts. Well, Trade Charmer, let's go answer Trade Charmer's question. Okay, traders, the first chart you are looking at this evening is the NASDAQ daily bar chart, and traders, this market has certainly been leading the bullish parade. It's leading the transports, it's leading the ES, it's leading the Russell. It is just leading the bullish parade. Sitting smartly inside of a parallel channel, seems to work its way up and down within it. And what does it do today on Tuesday? Puts in a swing day, drops all the way down, hits the trend line, rallies up and settles right near its highs, rendering this a swing day up. Traders, I think that looks pretty strong. Now, why have bearish indicators not knocked this market down? That was one of the questions, or that was our question of the day from Trade Charmer. Trade Charmer, look at how strong this market is. What happens when a market goes into a bull leg like this one is that many indicators become overbought and stay pinned overbought. In other words, indicators that usually go like this will go to this overbought area and just jerk around and stay overbought for a long time while the S&P continues to rally and rally. And that is why, even though they look like bearish indicators, when they're pinned like this, they're actually still bullish. So I think you need to reassess those indicators. Another thing that I can tell you is that when a market gets into a parabolic bullish move like this, or bearish, but this happens to be a bullish one, indicators do not work as well as they normally would in a trending market. So, of course, your indicators start to not help you, and then you have to become a pure chartist and follow the formations higher. So, even though the indicators may look bearish to you because they're in the overbought area, it does not make indicators overbought. Let's look forward, traders. A couple more charts here. Okay, traders, we are looking at the Dow Jones Transportation Average Daily Bar Chart. Once again, in a very well-defined parallel channel, and within that parallel channel, a new, sharper parallel channel is developing, and it is just bouncing off of it high and low almost every day. This looks strong. It is being dragged around by the NASDAQ, even though it is strong on its own, and the NASDAQ will pull this market higher as well. So you have a very strong-looking Dow Jones Transportation Average, deemed in most cases the leader of U.S. indices, and you have a very strong NASDAQ, which is leading the parade recently, so you must think that this is bullish. Let's look at more charts here. Okay, traders, now we're going to go from a bullish S&P to a bearish euro currency, and what's odd about that is traders for the last at least 6 to 8 months, the euro and the S&P have been rallying together or dropping together, but going in the same direction generally almost every day. Lately, that is beginning to change, and in fact, as of today, I have a clear-cut sell signal in euro, while I still have a buy signal in the U.S. stock market. So if euro has a sell signal while the ES has a buy signal, that must mean that the dollar's strength suddenly over the last day and a half, and who knows if it'll hold, is going to knock euro down but maintain the gusto that it's already given to the ES because of the decline the dollar's already had. Now, traders, look at this again. What's actually happening here is you're probably just building a bull flag, and once the euro comes down to the bottom of the bull flag, it'll get bullish again and head back up to the top of the bull flag and eventually break out on top. But for now, we are right here inside the middle of the bull flag, and I think it goes down to right about here, around the 136.20 area, which would be the bottom band of our bull flag. Now, that's bearish for day trading. And let me show you why now I am convinced that even if the dollar stops going lower as of today and becomes bullish, that the stocks will be bullish as well. Let's look first, before I take you into that chart, I'm going to show you quickly the indicators behind euro, and then that next chart should help you put this whole puzzle together. Okay, traders, this is the euro daily bar chart, but instead of showing you the bars, I am showing you indicators. The commodity channel index is clearly bearish right here, pointing straight down, as is the MACD, moving average convergence divergence. It has hooked lower, it has crossed, and it is starting to move lower, and it is a slow moving laggard indicator. If it has crossed and it's pointing down, the market is already beginning to go down, or in other words, the market's already on a downswing by the time this indicator lets you know that it's getting real. Below that, we have slow stochastics. It's usually one of the first indicators to let you know when a market is changing direction. Clearly, that is bearish. Clearly, the euro is bearish. When you look at the short-term daily trend, it is bearish. And when you look at these indicators, they're absolutely bearish. So if you have a bearish euro, how could we have a bullish S&P? Let's look at the next chart. Okay, traders, this chart, although it looks complicated, stay with me on this. I've shown this to you in other videos. This is not a complicated chart. What I'm showing you here is this. The green bars represent the dollar index. The blue bars represent the S&P. The dollar index on March 6th of 2009 tops out at the price of about somewhere around 89 or 90, right up there. The dollar tops out. It starts a tremendous decline, as you can see, down, down, down. What happens as the dollar starts that tremendous decline? Well, on March 6, 2009, the S&P bottoms. The S&P bottoms and rallies all the way up from 666 all the way to 1220. Now, here's where it gets interesting. The dollar index bottoms out right here on 11/27/2009 at the price of around 74.28. The dollar bottoms right here. So let's see what's going on. While the dollar's going down, the stock market's going up. Which should tell you if the dollar stops going down, the stock market should stop going up, right? You would think. But because the dollar declined so much, it gave wind to the sales of the S&P, and it continued to climb. And you know what happened, traders? Right here, when the dollar bottoms and starts to rally up, up, while it's rallying up, the S&P continues to rally and rallies for 22 straight weeks. After the dollar first has a decline, then bottoms, then the dollar and the S&P rally together for 22 straight weeks. That's what happened between November of 2009 and June of 2010. Now I'm going to show you where we are today. Almost the exact same type of move. The dollar rallies all the way to June 12th. It rallies up to here. Then it starts a major decline. While it starts its major decline, the stock market bottoms out and starts to rally. Now here's what gets interesting. We had what looks like a possible bottom in the dollar index on Tuesday this week. If that is the bottom, the S&P should rally for almost 22 more weeks before the dollar index stops it, or I should say, should rally with the dollar index while the dollar index begins to build some steam on the upside. So, if this is a bottom in the dollar, it should not stop the stock market from continuing higher for almost 22 weeks. Traders, you've seen this exact move right here. Dollar goes up to about here, drops to about here. Well, in the move we're experiencing now, the dollar goes up to about here and drops and stops about here. That's almost the exact same move which gave velocity to the stock market all the way to here. So now the stock market stopped right here. The dollar may have bottomed, but we should have velocity to go all the way back up here. This is a very interesting chart, traders. It absolutely proves that for 22 weeks, the stock market and the dollar rallied together after a big dollar decline. Well, we've had a big dollar decline. If we've bottomed, the stock market and the dollar should rally together. Here you've seen it happen right before your eyes. Traders, pull your charts, do your own homework. Please take a look at the relationship between dollar and S&P because it is a real relationship. And then look at how the euro suddenly is becoming bearish while the S&P is still maintaining its firm ground. So, traders, you've seen the charts. A bit of a long-winded answer, but traders, it was necessary, and that is why we are selling rallies in the euro for Wednesday, buying dips in the S&P, and possibly buying dips in the wheat. We'll see how that one pans out because the wheat's got a great-looking formation for the upside as well. So, traders, there is my technical argument for why the S&P and the dollar can easily rally together if the dollar is done going down. That dollar getting cheaper and cheaper hoists up the stock market. It makes the valuation of our companies cheap no matter how you want to argue against that, traders. I just showed you on the chart before your own eyes that is the end result after a big dollar move. So you can send in your hate mail and you can send in all your insane comments. I know I'm going to get like I get on every video when I'm bullish, but I have to be bullish when I show you something like that, traders. I trade what I see on the charts. I have no opinion. I can be bearish tomorrow, but I have to be bullish at least for the onset of this trading session based upon the analysis I've just shown you. Traders, I hope this video helps. I hope all my video helps. I hope you come meet me at my site at my OMNI Trading Academy. It's www.livewithoscar.com. Jump into my trading rooms. I have a free trading room where I am at the helm and I am there to help you understand the analysis, understand the markets, and try to shave off some years of your learning and experience. Because traders, it takes a long time to get good at trading. But you hang out with a guy with 28 years experience, he can easily shave off some of the years that you have to go through to get good at this game. So come on down and join me, traders. Make sure you give me a buzz. If you don't want to come to the site, give me a call at 702-629-4755. And traders, I love to mention this because it's one of the best things we've done in the last few months. But we have Omni on the go, traders. You can see the Omni trades right here on your cell phones. You simply have to go to m.livewithoscar.com on your cell phones. You can go right to my Omni recommendations, see the flash updates, and on some phones you can jump in the chat room and chat with us right from there, or the trading room as I like to refer to it. So use your phones. If you got to be mobile, you can still be with us. You'll still get the flashes. You'll still know where we're buying and selling. And if you're at your computers, come on down to our trading rooms. Traders, I'm out of here. I'll see you tomorrow night for another video unless something insane happens in the markets. Make sure you keep your emotions out of trading. Make sure you place your stops and place them first because a stop is your best friend. And one of the best things you can do each day when you trade to keep your emotions out of this thing is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out.
Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.